I really screwed up bad on our public portfolio, and now my cash secured puts are deep in the money. Here's what I'm doing next. Yo, what's going on, premium chasers? I hope you are having an absolutely God-blessed day today. Every single person that comments down below is going to get our rolling ebook. This is a must-read, especially if you're an option seller. Mastering rolling and management of your positions is key. So if you want that full ebook, drop a comment down below on today's video, and please hit that like button and that subscribe button. It helps us reach more people, more than you can imagine. So guys, today we got some big updates on the public portfolio. If you guys haven't been following along, deposited $5,000 into our options selling Fidelity account, and we've seen what happens, and I'm just documenting my journey through it. So firstly, yesterday I opened up a new put. As you guys know, I did end up selling my SoFi shares, those at $17.50, freed up a bunch of collateral for me, just around that $2,000 mark actually, and I went and did some Fiverr cash secured puts. All right, I did some Fiverr cash secured puts here at the $20 strike. So you could see that right here. And then if we go to our activity tab right here, you will see that I collected $54.33 of premium on that. And you could see that right here in our trade log for a nice 2.7% return on collateral. Basically, all that is taking the premium, dividing it by $2,000. And yes, I am very, very happy with that trade, especially for a company that I have a lot of high conviction in, that I believe is getting a little too beat up, and then we see it nicely at 1.5%. So I'm quite happy about that one. But guys, what happened? What happened to Snapchat last night, guys? Down 20% today, just under our strike price of $750 for our cash secured puts. We are officially in the money. If you guys don't know, we did a cash secured put, just a single contract for $750, right? And we had a nice little 2.3 ROI on collateral here on that move. That is, again, the premium divided by $750. Obviously, you're going to see different premiums, guys. Results are not financial advice. This is just the premiums that I collected at the time of me recording this video. Right, so we have our Snapchat here, we have our strike price, and now we have Snapchat down 20%, which puts our cash secured put in the money, okay? Now, what am I gonna do about this? Well, we have some options, pun intended, of course, okay? So heading back over to my positions here, right, I can go into my Snapchat. Now, I have options that I can, obviously buy to close this. That's not what I would do right now, but I can sell to open additional positions, okay? Now, right now, the public portfolio, we are tapped out, right? So we are just about tapped out. We have at $49.50 on our cash secure, or in our collateral, and that's just at our $5,000 mark, okay? That's already just at our $5,000. So we don't necessarily have more collateral, but if I had more money in this account, this would be a time that I would start going to look at premiums that I could collect on Snapchat. So taking a look at Snapchat, and I honestly, I use this strategy as a way to dollar cost average down, right? Especially on companies that I like, that I believe are having really big market overreactions. So here I am just on the Snapchat options chain. I'm just going to go over to the puts here, and I'm just going to go out a little bit here. I'm not going to do the 8th, not the 15th. We'll just do the 22nd, 29th. All right. So we could see the 750s or the 7s already paying $17. Not too crazy of an ROI here by a return on collateral here. That makes me believe that it is a bit of a market overreaction. You could see for the 1750s, we collected just around that 2% mark as well here. I believe this is a big market overreaction on this. But if this was me and I had the cash in this account, if I didn't open up Fiverr yesterday, which in ways, it's okay. I like to be diversified. I can't say that I would 100%, today I saw Snapchat down 20%. I'm going to jump into more cash secured puts. I most likely would have, but I like that the public portfolio is nice and diversified. That's the way I like to do things, right? I got my Fivers, I got my American Airlines, and I got my Snapchat put. But going out about 30 days right here, we could start seeing that, they're nice, right? They're starting to look pretty nice here when we start going 30, 45 days out. Even the September 5th, right? We're getting around $20 on the $7 puts. Taking a look at a cash secured put calculator really quick. All this stuff is free, guys, in our Facebook group. Link is in the description. Join us. Just about that almost 3% return on our collateral. Now, obviously, you can open up more contracts if you choose to, right? These are obviously all scaled down numbers, right? And if we even go, let's see what September 12th is offering us here, $27. Now, we are aggressive on that delta. You can see we have a 31 delta here on those cash secured puts at the 7, right? And we have a 17 delta just above it for the 650s for an $8 premium. That's nothing, right? That's not a trade I would ever do. Like if I do $8 on $650, just gets at that 1.23. Now that might be a good trade for you. You got to go figure out what your ROI on your collateral goals are. I don't know what those are. For me on this portfolio, this public portfolio, I have no problem being a little bit more aggressive, to be honest with you. So I'm aiming over 2%, or at least as close as possible to that 2%. You're not going to see me doing stuff that's like 5% though, by any means. You're just not. That's not how I like to invest. I definitely like to be a little bit more. Try to be. Listen. I got the itch sometimes myself, guys. Right, but I try not to scratch the degenerate itch as often as I can. But with that said, you could see here, right? We could dollar cost average down at the 7s, right? And that would most likely be the move that I would have done. Even though that is a 31 delta, it still is a company that I have a higher conviction in. Now, other options that I maybe will have, right? I can roll it, right? I can try to roll this cash secured put. Now, is that something I'm going to jump into doing today? Absolutely not. Do I believe that this is going to be is a market overreaction and we're going to kind of bump back up here down another percent, just shooting live? Yes, I absolutely do. I think we're going to come right back up into this up into our Bollinger Band areas here, or we're going to hover around this 750 area, and that's no problem by me, right? I like when I can get below my 200 and 300 day moving averages. 200 day is around 1070, 200 is 989, 300 day is 1070. If I can get my cash secured puts assigned well below those, listen, you're not going to hear me complaining about that, guys. You're just not, right? That's just not something I'm going to complain about, especially with a company that I do have a decent amount of conviction in. So let's take a look at our trade journal. So again, we opened up Fiverr. The reason I did Fiverr, guys, is today it's already up here. And you guys already know I try to document everything I do on this portfolio. I am going to document every time I make moves. And yesterday obviously was a big move day, right? This has been getting beat up here for the past couple months here. And it's a stock that I love. It's a business model that I love. And I use the actual business itself. And again, trading below the 200 and 300 day moving averages. Even with I zoom out, I know I'm going out 5 years for like a hella long time. I love this. For a wheel strategy stock, Ark Options stock, what I like to call, if you don't know what the Ark Options Strategy is, and you know what the wheel strategy is, you are carrying a leaky bucket. I just want you to know, click the first link in the description of today's video. You need to learn what the Ark Options Strategy is. Genuinely, you are carrying around the leaky bucket. But you could see here, I love when the stocks are kind of just sideways. Right? It's not doing like insane moves. Right now, it used to, right? Look at this thing. That was crazy. I don't know if you guys remember those moves, but what we could see here is, for the most part, we do kind of like hit this top Bollinger Band, and then we have these very aggressive peaks and valleys on Fiverr. I like these kind of moves, right? Like now, obviously, the Bollinger Band, it's a fugazi, right? Nobody knows what a stock is going to do, go up, down, sideways. Literally, please, God, like just don't. The only point of technicals is for us to decide as option sellers, hey, when to get the best possible strike along with the best possible premium. That's all I use this for, okay? But you know what I mean? Like that's what I use it for. Like you're not going to necessarily see me doing cash secured puts when stuff is at the top Bollinger Band, when usually not guarantee. There's unfortunately no guarantees in the stock market, but we see a retraction, and we saw that right here. So I am bracing for us to get back up towards that top Bollinger Band and close out my position. And then what am I going to do? I'm going to sell more cash secured puts when it starts coming back down. If I take assignment, not a problem. I'll ride the wave back up, which will eventually, hopefully, knock on some wood, hit the juice button, will eventually come up. Guys, if you want to stay ahead of the curve with option selling and join an incredible mastermind group, giving you all the resources, courses, trainings, trackers, everything you need, right? Click the first link in the description of today's video. Number one, you can't be toxic because we're going to talk to you before we invite you in. Number two, you need to be financially stable. As you see, selling options requires capital. It's just the way it is. I don't make the rules. Okay. So if you're interested to learn more about our mentorship program as well as mastermind, click the first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.